As you might already know, I recently bought Nvidia stock and I've had Nvidia stock rated as one of the best stocks to buy all year long in 2025. And so I was highly anticipating Nvidia's latest quarterly earnings results because it's a company I'm strongly interested in. I evaluated the latest earnings release. I read the entire conference call transcript, and there was a lot of interesting insights that management delivered for NVIDIA stock investors, which I will share with you in this video here. And you can understand a little bit more about what's going on with NVIDIA stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
NVIDIA's CFO, Colette Kress, said that the company's revenue came in at $44 billion, which was up 69% year over year. That was better than what management told investors to expect in the upcoming quarter, even though it was a challenging operating environment. Of course, you had the headwinds from tariffs. You also had the export restrictions on NVIDIA's H20 chips to China. Despite those headwinds, the company still delivered revenue better than what they guided for during the quarter. Truly impressive performance. The company's benefiting from AI workloads that are transitioning strongly to inference. And what that means for NVIDIA stock investors is firstly, most companies were buying NVIDIA's products to train large language models. Nowadays, most of the purchases or most of the use of NVIDIA's GPUs, NVIDIA's technology, is going towards the output from those large language models. People using ChatGPT and Google's Gemini, etc., and asking it questions, engaging with these AI platforms. That's what's driving most of the use right now for NVIDIA's GPUs. And that's good news for NVIDIA because its latest generation technology, the Grace Blackwell, is built for that purpose. It's built to optimize that purpose. So the new export controls on H20, which is NVIDIA's older generation technology, did not provide a grace period to allow us to sell through our inventory. So the export restrictions were sudden and there was no grace period. So it was a shock to NVIDIA. The CFO said that they incurred a $4.5 billion charge because of that export restriction. And I reported on that when the news first came out. And at that time, which was a couple of, I want to say a couple of weeks ago, NVIDIA said that they were going to take a $5 billion charge as a result of those export restrictions. It turned out only $4.5 billion. So about 10% better than expected for this export restriction because they were able to reuse some of the materials, recycle some of the materials into other products, NVIDIA said. But the bigger concern is that they're losing access to the China AI accelerator market, which NVIDIA believes will grow to nearly $50 billion relatively quickly. And that's going to have a material adverse impact on their business going forward and benefit our foreign competitors in China and worldwide. Now, NVIDIA, throughout this conference call, made some pointed statements, in my opinion, to US regulators, that are watching NVIDIA closely. They made some pointed remarks, and this is one of those, right? This is NVIDIA saying to the administration, we don't agree with your policy on this export restriction, and saying so in a very tactful manner. They went on to say that their newest technology, Blackwell, contributed nearly 70% of data center compute revenue in the quarter, with the transition from its older generation Hopper technology nearly complete. These newer systems are complex to build, and we have seen a significant improvement in manufacturing yields, and rack shipments are moving to strong rates to end customers. They did report an increase in quarter-over-quarter gross profit margin, and they are forecasting another increase in gross profit margin in the second quarter, and they're also forecasting a continued increase in gross profit margin in the third and fourth quarter to nearly mid 70%. Right now, they're moving up from around 70% up closer to 72% in Q2 and then closer to 75% by the end of Q4. They highlighted that major hyperscalers are each deploying 72,000 Blackwell GPUs per week and are on track to further ramp output this quarter. Microsoft has already deployed tens of thousands of Blackwell GPUs, and it's expected to ramp to hundreds of thousands of GPUs with OpenAI as one of its key customers. And I've been reporting on these major hyperscalers, including Microsoft, Amazon, and Alphabet. They've all said they are spending much more money this year on capital expenditures, with most of that money going towards these Blackwell GPU buildouts. Microsoft, for example, has said that it's going to spend roughly $80 billion this year on capital expenditures, which would be up from $50 billion in 2024. Alphabet similarly said it's going to spend around $75 billion in 2025, up from around $50 billion in 2024. Amazon said it's going to spend over $105 billion on capital expenditures in 2025. That's up by tens of billions of dollars from 2024. Also, Meta Platforms, which, can be included in this discussion, said that it's going to increase its spending to over $65 billion in 2025. So all of these major hyperscalers are increasing their spending on capital expenditures by tens of billions of dollars. And most of that spending is going towards these build outs of these data centers optimized for artificial intelligence. So Nvidia is not stopping here. They're already rolling out the GB200s, but their next generation GB300, which they're calling Blackwell Ultra, those systems began testing earlier this month at the major CSPs, cloud service providers, and they expect production shipments to commence later this quarter. So not only is demand incredibly strong for NVIDIA's existing Blackwell GPUs, the GB200s, they're already rolling out the GB300 systems, which they expect production shipments to expand later this quarter in Q2, and then, of course, accelerate in Q3 and Q4. NVIDIA has said that they're accelerating their innovation pipeline. Instead of launching upgrades every 2 years, they now plan to launch upgrades annually. And we're seeing NVIDIA deliver great success on that increase, nearly doubling the pace of innovation. There's been some hiccups. It hasn't been completely smooth, but it's been overall incredibly impressive given the innovation they're delivering, given the surge in demand they're experiencing, and the fact that this is a very complex technology, very precise manufacturing of chips. And it's not a digital product that's easier to ramp up. It's a physical product, and its ability to ramp up a physical product this quickly has been truly impressive. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.